Hi, my name is Dion, and this is the Bullion Vault. How are you doing, Willem?
One on yourself. Yeah.
Good, thanks. So, episode 50, fireworks. It's taken us a bit of time. I mean, last year we were doing the podcast far more regularly, but I think just down to work constraints right now, it's been that we've been limited to the time we have available. But your thoughts?
Yeah, it's been an interesting ride from where we started to where we are now. And I mean, if we look at bullion prices, it's been a roller coaster all the way. We've seen historic highs like, five and a half, $5,600 an ounce of gold, $100+ an ounce of silver, etc. And we've seen some very, very big drawbacks and drops again. So, yeah, we've seen the best and the worst technically in the history of precious metals over the last few years while we were doing this.
It's crazy. You mentioned that, and I always go back to when we did do forecasting for the next year. And when we first started this podcast, it was December of 2024. And I remember thinking, what's 25 going to bring precious metals? And I remember looking and forecasted, across the board, Goldman Sachs, Bank of America, all of them, Deutsche Bank, and they're all coming out. Gold's going to break $2,500 an ounce. And some, there were some conservative outlooks. Some of them said by 2030 it should be $3,000 an ounce, and so on. And I remember we kept having to revise the projections, and literally by what 4 or 5 months into the year, we kind of said we can't actually do that anymore because we literally were just chasing the prices.
And I mean, it wasn't just us. We saw the big institutions. We saw what's their names? Goldman Sachs. We saw
JP
J.P.
Morgan, yeah.
Morgan. We saw all of them. Every 2 months, there's a new revision to their projections, and it was actually quite funny on the one hand to watch, but quite concerning on the other hand as well, because these are the best minds in the business. These are the people, the most trusted, the most experienced people in the financial sector, and basically what they're saying is, we don't know.
Yeah, and again, you raise a very valid point. Is they've got some of the best paid minds to unpack these forecasts, and with all the education and qualifications behind it, saying how do you best see it going, and every single one of them got it wrong. There was that outlier from what was it? The precious metals, the silver company. It will come to me. But he had said in around 2020 that silver would break the three-digit mark, $100 an ounce. And we said, that's a bit of a stretch. And yet we're there. We've gone there. We've overcome that. There's been a retrace, but we are so far above $50, which was an absolute benchmark. Right now the benchmark is around $80 an ounce.
Yeah, I mean, right now we're sitting at, I'll tell you exactly, 79.66 at the moment, right
Yeah.
now as I'm looking at this. And, this is the thing, and we were talking about it in the last video as well, about, and I see it's actually on the way up at the moment, but never mind that. We were talking about this in the last video, when we saw the prices drop, and people were panicking and selling off and everything, and we saw gold go down below, I think, did it go below 4,000? I can't remember where it actually bottomed out before starting to climb again.
Yes. There was that breaking where it went back under $4,000. But again, it was very short term. That was during that whole period where it had ramped up. It broke the $3,000 mark, and then kind of went up a little bit more. And then there was a bit of a retrace, and then it shot to mid 3,000s. And then it went to the high 3,000s and then broke that 4,000 again, that dropped back down. And where we saw it hit all-time highs of over $5,000 an ounce, $5,500 an ounce.
Well, yeah, I mean, this is the thing when we spoke about it last time as well. You know, where I think I said, don't sell your precious metals unless you need to. It's as simple as that. Because anybody looking at that, any investor looking at that thing, is looking at this prices drop. They would see it go from $5,500 an ounce. They would see it fall to $4,500 an ounce, and they would panic and they'd say, time for me to get out.
The biggest fall in 50 years, or we had this, that gold has never fallen in this percentage in, you know, all-time record drops. But there's context.
And I mean, had you sold at $4,500 to protect your investment and get out while you still can, firstly, you would have made a massive, massive profit already, considering you hadn't bought the week before.
Yes.
But you would have already, let's say you've held that for 2 or 3 years. You would have made an absolute killing on it already. But I'm looking at it now and it's 4,800.
And year to date, and that's the important thing, year to date, we're still up.
I think I did something on this a while ago. And yeah, it was basically all the precious metals are still up year to date. And that's the thing. I mean, right now we're sitting, well, the 1 year gain was 44%.
Yes.
And we're sitting at about, I'm just trying to find the actual year-to-date figures for this.
Why you find that? So the guy I just checked was Keith Newmeyer from First Majestic. And I checked. I did say 2020, but it was January of 2020 where he said that silver would break the $100 mark. And at the time, he was considered to be outlandish, considering context that silver in March of 2020 was around $12 an ounce.
But that's the thing, and we've seen it over and over again. We see these guys come out with what we consider to be outlandish figures. I mean, 2 years ago, if you had told me, oh, I see $3,000 gold for 2024, and then I see 5,000 gold for 2025, I would have laughed at you, you know, because we were sitting at roughly about $2,000 an ounce. Above, below, it was sort of hovering around there, I think. And yeah, I remember looking at these things to do some forecasts, and then I'd see a $5,000 an ounce, and I'd go, okay, that's the insane outlier at the top. And yet here we are. I mean, I think it's roughly about 9% to 15%
year to date. That's still fantastic.
If you consider that we've had, according to if you believe the sensational media, the biggest crash of gold in history, that's pretty impressive.
Well, it shows you how much it's gone up, but in the context, and this is why, you know, if you are an investor and you basing your decision making on media sentiment, you're going to always be on a hiding. Firstly, precious metals is not about buying today, selling tomorrow. Very important. Secondly, is you don't react to those. The prices will always regain. And that's what we've always said. We've had clients where they've bought and then the next day it's dropped significantly. And we've just said, maintain your position, and over time it will rebuild itself back to the original pricing and then surpass it. And we were never wrong on that.
Definitely. I mean, silver as well. Yes, we're talking about it was over $100 an ounce at one stage, but it fell quite significantly as well. I mean, it was down to $60 an ounce or something like that.
Yeah.
And yes, it's reason to panic if you just bought silver for $80 an ounce and suddenly you're seeing it drop past 70. You're going to panic and you're going to think, oh my goodness, what's happening? Is it going to go back down to $25 an ounce? Maybe I should get my money out now while I can. And once again, we're sitting at just shy of $80 an ounce of silver at the moment.
So again, year to date, we're up from the beginning of the year from that also.
I think we're up less, but I do think we are still up a little bit. Let me just have a quick look there if I can find some info on that. But I mean, if we take it from over the past year, over the past 12 months, it is up absolutely by insane
Yeah,
margins.
if we take it from the last 12 months, silver this time last year wasn't even above $50. In fact, I think it was around in the high 30s, if I'm correct, and I'll check that figure. So March or April of 2020, where the price was, and 2025 price of silver.
Well, it's a little bit difficult to get accurate figures on this because, everybody has their own metrics that they're using, and a lot of the stuff that you can just quickly look up is outdated. So, but I'll do a proper workup of that and actually just have a look at that when we have some
Yeah.
time. But the fact of the matter is that when we were looking, what was it last year?
So last year, I've got the numbers here already. So April of 2025, it fluctuated between $28 to $34 an ounce.
I mean, we're sitting at 80.
So I said mid 30s. So I wasn't far off that. Again, year to date, and I can tell you now, it was probably, if I remember, we went into the beginning of the year. There was that big charge up towards December towards the festive period, and then just after that, there was a kind of a lateral movement towards the new year, and then once it went into January, it started just to surge upward. So I'm going to take a guess here that we probably started the year on probably about 65, between $60-$65 an ounce.
Actually, I just found a table here, and I can tell you it was $71
Okay.
an ounce. So yeah, still we sitting at 79. So that is, I mean, that's what, a 10%, more than a 10% increase.
Well, there we go. So with all the sensationalism and what we're really trying to highlight here to the person listening is, yes, silver shot to all-time highs of over $100 an ounce. Gold went to over $5,500 an ounce, and there's been these big retraces. But now we're also going to talk through the context of why that's happened. But more importantly is year to date, they're still up. So from the beginning of this year, you would still be up if you had bought both. If you bought on those highs, yes, you are down. But my advice to you and my suggestion to you is hold on, because this is by no means the end of this upward cycle.
Definitely not. And I mean, we're talking about gold and silver, but we can include platinum in that as well. Because, I mean, right now, we're looking at platinum that's sitting well above $2,000 an ounce, $2,146 an ounce right now. And I mean, once again, from where we were last year this time to now, that is an absolute insane jump. It's platinum was actually, I think, one of the best performers last year
Yep.
by some margin.
Yeah.
And so yeah, it's important to not rule platinum out because, like silver, it's got a lot of other applications. There's an industrial drive and an industrial demand for it. So, gold is a unique asset in the sense that it's valued for its value, if I can put it that way. It's valid for its intrinsic value, its scarcity, etc., etc. Silver and platinum has that extra added sort of attraction on it due to it being an industrial metal.
Yeah, so let's just unpack the current conditions. I mean, what's interesting, as you said, and there is that component which puts silver and platinum in that context of an industrial metal, and the demand. We've spoken of this before. With silver, the photovoltaic market, your solar panels, has continued to be on an upward rising curve of around 20% growth per annum in that sector. We know that in the EV, and then also the whole transition away from your traditional energy sources being diesel and petrol into electric, fully electric, or hybrids, or now even hydrogen fuel cells coming into it, that there's a definite shift away from that, which then gives space and more warrants more silver being utilized within that set, because again, silver is the highest electrical conductivity. Platinum is utilized also in all the hydrogen, be it from the the harvesting of it to the fuel cells as a catalyst, taking the gas and converting it into energy, electrical energy. Platinum has still been by far the best conductor of that. So these metals are here to stay, and they will warrant their place. We've seen China have a massive boom from an automotive perspective. I know that within the West, we see the likes of Tesla and all of this, and they rock stars and this and that. But you go and see what the Chinese market, and we've spoken of this many times, but there is a complete invasion internationally with technology and with automotives that are coming from the East, and specifically from China. But never, don't forget South Korea and Japan, which Japan has always been within the Western market, with Honda, with Suzuki, with what's the other one?
Toyota.
Toyota, which is one of the biggest. So again, there are those companies, but now you're getting the Chinese coming into it. The South Koreans have been very, very successful with both Kia and Hyundai. So for me, the whole change of this world from an industrial perspective has been what's coming out of the East. And interesting enough, I mean, I just heard information today on growth GDP, and China is just short of 4% from the year to date, and that's significant considering we have a whole political crisis that's been unleashed on the Middle East, which has shut down certain countries. I mean, we as Formula One lovers have missed out on 2 races because of it. I'm not happy about that.
No, we're definitely not happy about it. And I mean, the world economy is not happy about it.
No.
We've seen, we're talking about the increase in, especially over the past week or so, the gold, silver, etc., has all been going up. But an important thing to remember there is that a part of it is because they are priced in US dollars, we have to take into account when that US dollar value drops, you know. So instead of the actual gold price going up, there is a component of it where it's actually the value of the dollar that has dropped. But still, compared to something, and this is actually one of the biggest cases we make for physical gold and silver, is the fact that it is geo-neutral. I can take my ounce of gold, I can go to another country, and it still holds that value of an ounce of gold. Whereas, had I had that same money in a local bank account in rands, something happens to the rand, we dive from, where's it sitting now, 16, just over 16 rands to the dollar, 16.30 or
16.40.
16.40 rands to the dollar. Something somewhere happens, the rand goes to 20 rands to the dollar, and suddenly I'm out all of that money, and I'm not going to be able to recover that. However, if I had that in gold or silver or platinum or whatever the case might be, it still holds that value of $4,800 or whatever the case might be, and that value is held around the world.
So just as we're now going into the one of the main topics for today's podcast, and we are very mindful of time, is very much what's happening in the Middle East. We've got to a point where the Straits of Hormuz, which if I'd said that to you 2 months ago, I think 99% of the people would have said the Strait of where, but now it's become a commonplace because it's affecting the world. That this gap between the UAE, which is that pinnacle point, and then also Iran has, I think it's about 22 kilometers in width, has now got the whole world's focus on this little strait where the oil, where fertilizer, where hydrogen, helium gas, all these materials are coming through. And now there's been blockades. There's been from one side, be it the US enforced a blockade, where Iran had then said, no, we'll only let through who is in line with us or in favorable to our cause.
Yeah, I mean, 20% of the world's oil flows through the Strait of Hormuz on a daily basis. It's absolutely
Significant.
significant. If you look at, firstly, you get different kinds of oil. You get the sweet light crude, you get the more dark heavy crude, and the US has been saying, "Oh, but we're the world's biggest oil producer. We don't need the oil from the Strait of Hormuz." Okay, well then leave it alone if that's the case. But obviously they don't do that because the sweet light crude that the US produces isn't really suitable to producing the petrol and the diesel that we need. It's more suitable to producing your more refined fuels like jet fuel and things like that. Also, if you look at some of the countries, the way that their refineries are set up, they aren't set up to refine that oil. And refitting a refinery isn't something that just happens overnight. It's not like,
No.
okay, we just turn the switch a little bit that way and now we can do that. No, the whole thing needs to be redone and it's going to cost billions and it's going to take years. So the whole point is that we still need the oil from the Middle East. It's as simple as that. So it doesn't matter how many barrels America is producing. Um, I mean, if they were producing all the oil they need, why have they always been importing oil from Russia, from Venezuela, from the Middle East, etc., etc.? So, I mean, I think that already speaks to the fact that it's something you can dress it up to make it look better, but the facts remain that strait is an absolute choke point, which is right now holding the world economy hostage.
Yeah, and again, I was listening where there was this thought by the Americans that they would come in like they did with Iraq with Saddam Hussein, and they took out the whole leadership of Iraq, and they were actually able to neutralize that country. Even there, they were looking for nuclear missiles, which they never found, but they were able to do a regime change. What Iran has gone and done subsequently is they learned from this, and they actually fractionalized their country into, I think, about 18 or 30 states, and each has authority over themselves. So even though they went in and they took out their government, they haven't effectively changed because each individual state has its own ownership, its own ability to operate.
Well, you talk about Iraq, but yeah, Iraq. But I think, if we look at what happened in Venezuela, is they swooped in, they grabbed their leader, they moved him out, and they installed somebody more favorable to um, their
Their
prerogatives
cause.
or their
Yeah.
cause. And I think that was what they were expecting. While Iran has been sitting there, they've been watching the world. They've been watching the world's sentiment towards them, and they have been preparing for this for decades.
Yeah.
So it wasn't simply a case of, okay, we're going to swoop in, we're going to grab the big head at the top and put somebody else in his place, and everything is going to come up roses for us. It has not turned out that way at all. So now we've got the Strait of Hormuz, which is blocked, which is essentially strangling the world economy. And that's the other thing that Iran has learned is, you know, yes, we can take on the US with bombs, but we are going to lose because the US has an insane arsenal at their disposal. At their disposal. They're spending $1 trillion a year on their military. So looking at that, it's firstly, you can't fight a conventional war.
No.
So they've turned to an economic war, which is hurting the US a lot more than all of their bombs, all of their drones, everything they have ever could. Um, yes, they went in looking for nuclear weapons once again. I highly doubt they're going to find it.
Yeah, I think from what I've heard is we looking at another Vietnam, and if they put and there is talk of this, at some point they're going to put a U.S. soldier feet onto the ground, and people forget that a lot of that country is very hilly. The terrain suits more of a guerrilla type warfare, which of course the indigenous population will be fully aware of and know and understand. And again, I think the US are facing another Vietnam, which can go on for years.
All in all, I don't see this ending well for anybody, really,
No.
because both countries are extremely stubborn. Both countries have their own view of what should happen, what they're entitled to, what they want from all of this to come to a ceasefire. I mean, we've had a ceasefire now, and that lasted 2-3 days. And basically, the American negotiators got tossed out on their ear and told, sorry, can't talk to you about this. To which the US has now blockaded the blockade. So now we've got Iran, which is saying countries favorable to us can pass through, and the US sitting just on the other side of that saying, no, nobody's going through. And which is just very funny to me, because the whole point of everything was open the strait.
And and I mentioned it earlier, is one of Iran's biggest trading partners is China.
Definitely. And I mean, we've seen that Iran has said the oil passing through must be paid in yuan instead of US dollars. I mean, that is a seismic shift in the world economy if that does happen. One of the reasons why the US dollar has been so strong and so resilient is because of the petrodollar. All oil transactions was concluded in US dollar. Now what happens if that shifts from dollar to yuan?
Yeah, so I think, we in a very tight, precarious position right now. Is it going to end anytime soon? No. Um, there was that drop again. I think a lot of what happened is the markets reacted, and there was a massive drop in actual market share. And of course, that's hence caused gold to shift, because people know gold is liquid, and they were able to liquidate it and then kind of return a lot of that capital back into the various institutions. So does that mean we're not going to see the prices rising? Hell no. This is not even started. We're going to get back onto that train. And especially if you go back on the traditional lay of how, or the cyclical lay of how gold flows, is generally into the European summer, the Northern Hemisphere summer, is where we tend to see prices starting to rally back upward. So for me, I think we will see an influence within the Middle East, but I'll also see that natural growth back into gold, and that natural surge back up, considering we're still about 15% up year to date.
Definitely. I mean, you actually nailed it, that, a lot of countries, a lot of central banks were liquidating gold to divert the funds to other things because of this entire situation, because of the fact that governments were getting constrained. There was a stagnation in flow of cash into the government. They needed the cash. We sell the gold to look after our people, to try and hold down inflation, to try and ease fuel prices that are absolutely rocketing through the roof. So yes, that there was a massive sell-off of gold, and that is in part what has driven the price down. Additionally, we know when US goes to war, that's big business, that's big money, and a lot of people saw this, and instead of holding on to gold, they decided to divert into US bonds. So, yeah, there were a few factors at play for the drop in gold, but as we've seen, it's sort of stabilized now. It's sort of regained a sense of sanity, if we can say that, and we are seeing that gold just climbing back up, along with silver, along with platinum.
And yes, not for anything do I think that we've hit any ceiling and there's going to be this retrace or the biggest collapse in gold in history, and so on. It's going to, I personally feel we will have this lateral movement, which is quite normal in a cycle of a commodity anyway. When you've reached those all-time highs, there generally is a quite a strong pullback, and then there's a retracing where there's lateral movement, and then it slowly starts to build. And that's exactly where we are right now.
Definitely, it's the model of booms and busts.
Yeah.
We get into that mania phase. Everybody wants in. Everybody jumps onto the horse and onto the bandwagon. That's the one I was looking for.
Yes.
Everybody wants to jump onto the bandwagon because look how it's surging. If this carries on for another 2 months, I can make so much money, etc., etc. And they tend to forget that there is a peak, and after that peak, you do get that drop. We've experienced that, and we're sort of starting the next climb again.
Yeah, so I think just on this topic, was there any other thoughts that you wanted to bring into it?
I mean, we watching as things are developing. It's literally, we don't know what the US is going to do next. Let's be dead honest.
Yeah.
We've reached a point where we literally have no idea what's going to happen tomorrow with the US administration. It's reaching actual comical levels now if I'm looking at some of the stuff that's happening.
Yeah, and again, I think from the investor out there, or the person that is concerned, where they're concerned about their wealth, they're concerned about how they're going to maintain the value of what they own. Again, my simple thing is hold on to your gold, hold on to your silver. They still have been proven to be safe haven assets, and this is the environment they were literally made for.
Definitely. I mean, once again, I'll repeat, don't sell if you don't need to.
Yeah.
Don't sell because you want to. It's as simple as that. Don't, if you really need to, if you really, really, really need that money right now, then yes, do sell your gold, do sell your silver, etc. If you don't need to sell it, don't. Simple as that. Hold on to it. It's a long-term game.
Yeah. In closing, Willem?
Yeah, it's going to. I mean, we're still in for interesting times. I don't think this situation in the Middle East is anywhere close to over.
No.
And any side that decides to make a big push to end it, it's going to have a significant impact on the world economy as well. And none of it that I can see is going to be good.
No, we are in very trying times. I remember there was a podcast where I went quite heavy on a market crash. Um, and again, that does come back into the play of this. I mean, war, as you mentioned, is money for the US, so that stimulates their economy. But we're still underlying a big bubble underneath all of this, where you look at debt to GDP ratio of the US, you look at Europe and so on, that they are not growing. They're not growing to the levels they need to. They've got stagnation with regards to birth rates, and you got an aging population, but you got nothing coming through. So the West in general is in massive trouble, and something has to give.
Definitely. And I mean, we're seeing splits forming all over the place. We're seeing a rift developing between the US and Europe. We're seeing China making deals with Europe. There's definitely a shift in the winds, and it's not just a shift of a political shift. It's an economic shift that's lying underneath all of this, and I definitely think it's going to be to China's benefit. Firstly, secondly, I don't think it's going to be to the world's benefit.
Yeah, it's tough times. Again, my final thoughts on it is maintain your positions. With these current conditions, it is a buying opportunity. The pricing is still very good, very competitive. I can tell you now, within 6 months from now, the pricing is definitely going to be on the upward take. I do foresee that even if as we head towards June, mid-year, we will be looking at a very solid gold price of around 4,000.
850? I don't know.
No. I was thinking in rands, and then I moved it. So yeah, I've forgotten what I. Okay, so any final words, Willem?
Well, I mean, right now it's as simple as if you see a big dip happening, that's your signal to buy.
Absolutely. Take care, and chat to you in the next podcast.
If you like the video, hit the like button. If you want to see more, subscribe, and we'll see you guys next time.
Thank you. Bye bye.